Hello and good afternoon, ladies and gentlemen. Welcome to today's virtual non-deal roadshow. My name is Julia Perron, a virtual event moderator here at Renmark Financial Communications. On behalf of our team, we'd like to thank everyone in New York and surrounding areas for joining us today for the presentation of Generation Mining Limited, trading on the Toronto Stock Exchange under the ticker symbol GENM, and on the OTCQB under the ticker symbol GENMF. Presenting today is Carrie Knoll, Chairman. With that being said, I will now hand it over to Carrie.
Welcome, everybody. If those of you who've seen our more recent Renmark presentations, this one is pretty much the same as before. There'll be a few updates, but just letting you know that in advance. As you know, Generation Mining is working on financing the construction of the Marathon Copper-Palladium mine in northwestern Ontario, and it's an exciting project. It's a lucrative project. Today's metal prices, it really kills it. So it's a company that you really should be following. Start off just talking about the metals that we're going to be working on here. It's been long advertised as a palladium mine, but with the recent increases in the price of copper, and I'll talk about copper a little bit later in the presentation, it's kind of equal between the two metals. And we've also got a real kicker in the platinum side of things as well. And I'll talk about some of the values of those numbers. We've also got a very nice little gold credit, which we've used as a stream for Wheaton precious metals. And we've got a not insignificant amount of silver that we'll be producing as well. And the way the mine is set up, in the first 3 years, we're going to be producing significantly more ounces of palladium and pounds of copper than we do over the average over the life of the mine, which is going to give us a very quick payback. And just one other point, these numbers here in terms of ounces and pounds are in the reserve category. They're only about half of our total resources. And of course, that can at some point extend the mine life. But 90% of our reserves are in the proven category, which is probably the highest confidence I've seen in any mineral deposit in my lifetime. It's a really high number. Often the numbers you'll see are 15 or 20%. Proven, we're 90, so very, very significant. As I mentioned, we're in northwestern Ontario. That has been regarded by the voting in the Mining Journal, which is a publication out of London, as the #1 mining jurisdiction in the world. And the other group that rates mining jurisdictions, the Fraser Institute, has us picked as #2 after Nevada. So very, very high confidence level as a place to do business compared to some of those scary places that other mining companies tread. We're shovel ready. We got all of our construction permits last year and ready to go, subject to financing. We're trading at a huge discount to our net present value, and I'll talk about why I think that is in a little while. And I think that's going to be re-rated soon. And lastly, we've got really, really strong support from the local Indigenous community, from the local town of Marathon, from the province of Ontario, and from the federal government. I've been in mining for 45 years, and I've never seen such strong support for a mine, especially from the federal government. And when people ask us how we're doing with the First Nations, because as you may know, in Canada, you don't build a mine without First Nation support. They actually did a private placement into us last month for $750,000, which is not a huge amount of money, but it was only, I think, the third time I've seen in history where a First Nation actually invests in the mining company rather than expects handouts. So we got a really great working relationship, and that's a credit to our management team, especially the CEO Jamie Levy has really earned that. This is a map of the Lake Superior and what's happening up north of Lake Superior. As you can see, we're right in the center of it, just north of the lake. We're just down the road from the Hemlo Gold Mine. Alamos's Island Gold is a little further away. Wesdome's Eagle River. You've got up here the only palladium mine that's operating in Canada right now. So, and just north of us is Equinox's new Greenstone mine. So we're in an area where there's a lot of mining, and that's important because you can draw on each other's workforces as jobs come and go. You can there's lots of contractors. Mining involves a lot of contracting, and there's contractors working in the area, so they're available. You don't have to fly these people in. You don't have to, and there's a town nearby. We're just outside of the town of Marathon. As you can see down here, here's Marathon, and here's our Marathon deposit. So it's literally a few kilometers north of town. We're right on the Trans-Canada Highway, that yellow line. The CPR main line comes through the property. There's a new 230 kilovolt power line that goes across Northern Ontario that actually crosses our property. We have to build a power line literally 2 kilometers from the main line into our mine. So that's a huge savings in terms of infrastructure costs. We've also already got a construction camp in town that we bought an option on to own, and that was the camp that was used to build that power line just 2 years ago. And we've got lots of other communities nearby, not just Marathon. There's the Bigdagon Nishnabeg First Nation, who did the private placement into us. They've got hundreds of people there. We've also got a commercial airport right on the property. In fact, it's so close to the mine that we had to design the tailings facility around the airport. We couldn't build it too high, so that's very handy. You can take a flight from the Island Airport here in Toronto to up to the mine site in an hour and a half, and you're literally landing right on the property where our mine is. So very fortunate in terms of infrastructure. I'm going to talk a little bit about copper and palladium here. The copper story's been getting a lot more press, and I'll just give a short update on what I'm thinking is happening. So the gray area in the bottom of this slide is the more traditional uses of copper, basically powering power lines and electrifying houses and home electronics, etc. And the blue area is what's been happening in terms of the energy transition. So that includes everything from the windmills and the solar, and having to wire those up to electric vehicles, and anything to do with the energy transition. And then the little bits on the top, which don't look like much but are still significant, are what's happening in the AI data centers and defense industries. So those don't look very big, but incrementally, given the fact that there's going to be a wide copper shortage predicted, they will have a huge impact on the future on the future price of copper. And this is what it looks like on a supply-demand comparison. And as you can see right around here, about 2027, 28, it starts to diverge. These are probable mines, and then you get into the possible mines, which only have a 40% chance of getting built by around 2030. We expect to finish our construction sometime in 2029. So we'll be timing that perfectly for what looks like is going to be a massive shortage coming in copper. And these numbers could get better as things develop in the world. Certainly the replacement of equipment in both the oil industry and the military industries are growing rapidly, and probably putting this slide out to date. Copper is already growing at a rate of historically of about 3.5% a year, which means that and one large new mine has to be built about every 6 months, and that is just not happening, not even close to happening. So that shortage is going to continue. It's already reflected in the price. The price was $4 2 years ago. It's now $6 a pound. And I think it's staying, I can see it staying between $5 and maybe up to $7 a pound for the next couple of years. So that's a really great price for us. And I'll talk about what that means to us. And this slide, some of you may have seen it, this is a real representative slide about why you need to have some copper in your portfolio. These are discoveries per year, and if you go back to 1991, there was 150 copper discoveries in the world, and then there was 90 in 2005, and then maybe 30 in 2010, and then you look at the last 10 years here, almost no discoveries, and you probably heard the stat that copper mines take 17 years to develop. They don't have to take 17 years, but that's what the history has shown us. So the mines that were discovered 17 years ago are being put into production now. But what's the next decade looking like? It's not looking very good for new copper mines. There just haven't been the discoveries. And people ask me why there haven't been discoveries, and I think the main reason is because most of the discoveries that outcrop on surface and are relatively easy to find have been found. The new discoveries we're finding are buried deposits, which not only are more difficult to find, but once you find them, they're more difficult to drill off and define. And then when you mine them, you have to go underground, which can take 4, 5, 6 years of development. So that 17 years could actually get even worse in the future if these mines that are getting developed are underground. So it's looking good from a supply and a demand situation. And then there's palladium, which is our other main contributor to our finances. We've got a product that is 85% used in catalytic converters in cars, which are required by law in any car that burns diesel or gasoline. So you've got a captive market, although declining slightly due to electric cars. But nevertheless, it's growing as time goes on, as the world gets larger and the populations get larger. There's more cars being used. And on top of that, more and more hybrids are being used. More than in the United States, hybrids are outselling electric vehicles more than 2 to 1, and it's 30 to 1 in Japan, which is the world's third largest car market. So you've got and a hybrid uses more palladium than a traditional internal combustion engine car, for a variety of reasons, which I won't get into. But so that's making up the deficit from what's happening in the electric vehicle market. And another thing that's happening is the high prices of platinum platinum is also used in auto catalysts. The high prices of platinum have accelerated a return to palladium. So what happened in 2022 and 23, our palladium industry lost about 1 million ounces to platinum in terms of catalytic converters in cars, which is about 10% of the market. It's a 10 million ounce market a year. And now that is reversing and it's going back. It hasn't happened yet because car makers order these things quite a bit in advance, but it is happening. And I think we're going to see 1 million ounces go back into palladium. And I think that's going to underpin the price for the next several years. Palladium has been in a deficit now for the last 14 years, and I can see with this return to palladium and auto catalysts, I can see that continuing even further. So I'm going to talk a little bit about our feasibility study. We did this in March of 2025. We've had banks review it as recently as January of this year. So the numbers are still standing up. There hasn't been a lot of inflation on that front since last year. The study we did shows an after-tax net present value, these are Canadian dollars, of just over $1 billion compared to our market cap of $220 million. But that's at the feasibility price of metals. So that was a 3-year trailing price. If you look at spot prices today, and actually this is spot prices of December 30th, we're actually a little bit lower than today. Our net present value goes up to $2.2 billion. So we're trading at 10% of that. Our after-tax IRR goes from 28 to 42% at today's prices. Our payback goes from 1.9 years, which was already really low, to 1.3 years. Incredible payback. I only know of one other significant greenfields project on the planning boards in Canada that has a shorter payback than that. That's a really unusual one. I've seen some of them out there that have 6-year paybacks and 4-year paybacks and that sort of thing. We're going to be producing 168,000 ounces of palladium a year and 42 million pounds of copper. As I mentioned earlier, in the first 3 years, the palladium is quite a bit higher, as is the copper. But even at that average price over the life of the mine, at today's copper price, we're going to get revenue on the copper side in Canadian dollars of about $340 million. Our annual operating costs of this mine to do 10 million tons is $280 million. So we're making a $60 million profit just off the copper. But then you add in the palladium and the platinum, and you've got another 460 million Canadian dollars in revenue. So you've got basically at today's prices, our OPEX is about 1/3 of our annual revenue. So really, really great numbers. And our all-in sustaining cost to produce an ounce of palladium is $781 US. That's against a $1,500 plus price today. And of course, copper is at $6, and we're going to be making copper for just over $2 a pound. So we've got just an incredibly profitable mine on the drawing board here. And this is, again, a breakdown of our revenue. And you can see year two, especially highlighting here, our revenue is going to be close to 1.3 billion Canadian dollars. Our EBITDA will be close to $1 billion. And that's why we get such a quick payback on a $1 billion Canadian capex. So we've had this project since 2019. In the time that we've had it, we've done 3 feasibility studies in order to keep it updated. Our permitting took a very long time, a lot longer than it should have, and a lot longer than we had planned, but it's done. We've got, in that time, we negotiated a $240 million stream from Wheaton Precious Metals on our gold and a little bit of our platinum. And we also got a community benefits agreement with the Bigdagon Nishnabeg First Nation. As I mentioned earlier, last year we got our permits, we revised our feasibility study, and at that time we headed head first into the mine financing. And how does a company with $220 million market cap get into $1 billion capex? And I'll break that down. And our goal here is now to start construction in September of this year. That'll be early works, what they call early works, so road building, tree cutting, etc., pouring a little bit of the concrete, and then over the winter, getting everything ready for a full-on construction starting in the spring. Well, the construction starting this fall, but the real guts of it will start next spring. And it's going to be from this September, about a 27-month build is what we're scheduling. So finishing construction around the end of 2028. So this is a breakdown of where we're going to be getting our money. We, as I mentioned, had a $240 million stream from Wheaton. We've already got 40 million of that, which we used in a large part for our permitting, engineering, feasibility work over the last several years. We've got 200 million more to come during construction. We've also looking at Caterpillar and Komatsu, leaning towards Caterpillar, I suppose, for $135 million in advance. Basically, we get the equipment and lease it back, so that'll come off the capex. And we've been working with Endeavour Financial out of London, England, to put a debt syndicate together. We've got ING out of the Netherlands and SocGen out of France, and the Canadian EDC putting up US $400 million, or that's about $540 million towards our capex. And that is very much on the verge of getting credit approval, and that'll be probably our next big announcement. Those of you who follow us might have heard me say in the past that we expect it by the end of March and then the end of April, and it's not going to happen at the end of April, but it is getting very close. It's what has happened is it's been very, very complicated between the various lenders, both the subordinated debt down here, the chief lenders, and Wheaton itself is getting something called the intercreditor approval. A lot of lawyers involved, a lot of negotiations involved. It doesn't really affect the project. It's just who owns what in the end of the day. So that's what's been holding it up. We expect to get it soon, but I can't give you an exact date. We also have up to $200 million in subordinated debt coming from a Canadian financial institution, which is connected with the government, although it is a for-profit division of the government. And that'll be subordinated to the banks. And then on top of that, we are looking at the balance coming from equity. We don't know the exact amount of equity yet, and that's probably one of the things hanging over the market. We should know that very soon, and we intend to get that, in the next couple of months. And that may not go to market at all. We've got a lot of interested parties, both government and corporates, looking at taking down that equity, and hopefully we get something at a really nice share price. And once all that whole package is together, then we're ready to go on construction, and we're expecting all that for certainly this spring, certainly maybe even next month. So how do we compare? These are a bunch of other base metal companies. You can look at this in more detail on our website, but the typical range seems to be them trading around 50% of their net asset value. And these are net asset values as determined by various analysts on the street. These aren't our own numbers. And what's interesting is we're only trading at 22% of our net asset value based on the feasibility study, and as I mentioned, 10% based on current spot prices. And so what we expect to happen is once we get financed, we expect to move into this area, and as construction proceeds, we expect to move up here to the left, and then the very left here is Foran, and it shows what happens when you have a successful mine build and eventual takeover, which is what normally happens in our industry, and that puts us at the real exciting part of the Lassonde curve for those of you who know it. So the Lassonde curve works like this. This is the initial discovery of a mine. Then these are the difficult years of permitting and feasibility work and negotiations with the First Nations. And then as you start building, you get credit for that, and you have an operating mine at the end, and that's where you peak out. So I want to give you a what if scenario here. This is a company I just mentioned, Foran, which was taken over recently by Eldorado. So Foran, in their feasibility study, had a 23% IRR. We had a 29%. Our payback was under 2 years. Theirs is over 4 years. Very similar CapEx. We're a little bigger than them, 120 million pounds of copper equivalent a year. They're at 90 million pounds of copper equivalent. And yet they have an enterprise value of $4 billion Canadian, and we have one of only 225 million at the time this chart was made. So the reason for that is partly, I think, because people don't think we're going to get financed, and I'm here to tell you we will get financed. And then the other thing that of course has happened is once you get taken over, it's usually at a big premium. I don't know if you've noticed some of the premiums that companies like Foran got, or Rupert got, or sorry, what was the other one? G2 recently got. They're getting huge premiums on these takeovers. So not only do you get a re-rating as you go through the construction process, but you get a second one if you become a takeover target. And there's a lot to be said for a built mine these days with the 17-year cycle between discovery and final construction. So we've been building the team of people, and I just want to mention, I won't get into everybody here, but Clinton Swimmer came on last fall as our VP projects, and he's done this before. He's worked for the big engineering firms. He's worked for De Beers. He's built mines in Africa, in South America, in North America, and he has really done a bang up job for us to date. We recently hired Eric Menges, and he is a former VP engineering at DRA Global. DRA is a South African firm which has basically overseen most of the construction of platinum palladium mines in Africa over the last 30 or 40 years. So this is a real talent that we were able to attract to our project. And then I'll mention another couple of the people here. Here's one of our directors that we just brought on, Kyle Kuntz. He's the VP projects at Equinox, which is in the top 5 gold companies in Canada, and he has joined us as a director. Paul McRae has joined us as a technical advisor. He will probably be, getting a more senior position in the company soon. And Jeremy Wyeth, again, a former De Beers guy, former head of engineering at Wood, which is an international firm, built the Victor mine for De Beers under budget, under $1 billion budget, and ahead of schedule. And but most of the people that we've added here were on Jeremy's team back in the De Beers days, and they've all worked together before, which is really important. And so we look forward to having these guys build the mine for us. So just to finish up, our corporate structure: 319 million shares outstanding, market cap of this is a wrong number on here. The market cap is about $225 million. Major shareholders: Sibanye, which is one of the largest platinum palladium companies in the world out of South Africa, owns 10% of us, has never sold a share. Management directors, our shares are all bought and paid for. There was no founder stock in this company. Eric's brought 5%, and Wheaton Precious another 5%. So we've got some pretty smart shareholders here, and that kind of brings us to the end of the presentation. So I think we're ready to have questions.
Thank you, Kerry, for the presentation. As mentioned, we will start the Q&A. Your first question for today, a viewer asks, could you comment on whether the credit committee stage is complete and what remains to reach financial close?
So as I mentioned, it's not complete. It's very close. We are working on intercreditor agreements, and these are lengthy, and these are law firms from different countries around the world. and it just takes some time, more time than we thought, but we're very close. So we're expecting that imminently.
Last webinar, you stated that bank credit approval is expected by the end of April, to be followed by government funding. When do you expect to announce the government funding? When do you expect to announce the equity portion of the mine financing?
So we hope to announce the government funding within a few weeks of the credit approval from the banks, and then the equity shortly after that.
Given the scale of Marathon, is your long-term strategy to build and operate the mine?
Yes. Yep. We plan to build it. There's a lot more value in a built mine than an unbuilt mine. Certainly, obviously, some of these takeovers of gold exploration companies have had big premiums, but gold's kind of in a class by itself. But as far as base metals and palladium go, certainly a built mine is worth far more, and we think shareholder value will be enhanced by the continued advancement of this project.
Are you still considering using trolley assist for the pit vehicles?
Not at this time. That will be something that can be worked in at a future date, but right now we're just looking at basically building, keeping things as traditional as we can.
To what degree do you anticipate sourcing goods and services domestically for the project?
Well, certainly you want to buy everything you can in Canada. If you can buy it in Ontario or you can buy it in Canada, you want to do that. First of all, it's going to be cheaper. There's not going to be any tariffs. There's not going to be any duties, that sort of thing. So certainly you want to buy whatever you can. But you got to sometimes some of this stuff like the heavy equipment, you got to buy it where it's made. So, but certainly everything, and certainly all of our trades, all of our workers, they're all going to be local as we can get them.
New technical advisors have been added in 2026. What key operational gaps were you addressing, and are there still areas where expertise is lacking?
So we have identified a total of just over 20 people that we can need. So we've got on the list you saw, we've got about 5. We have identified another half a dozen at least, but we're not hiring them until we're financed. And then we're working on getting the balance of them. So we are going to need more people. We have announced that Ausenco has been given the EPCM contract to build the mine. So clearly we're not the ones building it, but we still need to keep an eye on them. So we need financial people, we need engineering people to keep an eye on everything that's being done. And those are the people we're looking for now. And that's all, of course, part of the budget.
How much potential do you see to extend mine life beyond the current reserve base?
Well, I mentioned earlier, our reserve is only about half of our total resource on the property. There is the possibility of a third pit. There's 3 open pits currently. There's the possibility of a 4th pit just north of the existing workings that we haven't drilled off yet. We got some nice drill intersections over the last few years, and there's 2 other deposits on the property itself that are some kilometers away, but one of them is particularly copper rich. So if copper prices, so those 2 could easily add 6 or 7 years to the production, and that possible pit to the north could add some more. And we're actually looking at doing some more exploration starting this summer. We use a firm out of the U.S. who has really specializes in this type of geology. And they have identified a lot of areas that have not been explored that really need to be. So we're going to be starting with some basic soil sampling and things this summer to try to identify additional areas.
Since your feasibility study, how much have capital costs increased due to inflation and labor shortages?
So I think I mentioned earlier that we had 3 feasibility studies. We did one in 2021, and then we did a second one in 2023 that had a significant inflation factor to it. And then Ausenco approached us in 2024 and suggested some changes that we could actually improve and lower the numbers. And we have done that, and we're able to lower the numbers in our third feasibility study in 2025. And then what's happened since that time is those numbers have been vetted by an independent engineering firm as recently as last January as being pretty much the same as the feasibility study. So we haven't seen a lot of inflation, and in fact there is not doesn't appear to be a lot of inflation in mining right now. The one area, of course, that may persist and cost us more money than we hoped is the cost of diesel fuel. due to what's happening in the Middle East. And as far as labor shortages go, we're not seeing that. When we were doing these feasibility studies, labor costs were actually quite high, higher than they are now, and that was because of contractors giving us unreasonable bids. And the reason for that is there were three major mines under construction in Ontario. Equinox just to the north of us, Magino to the east of us, and to the southeast of us was the Magino and then the Cote Lake. So the three mines, those are all finished. So all of those contractors are actually looking for work right now. There's no mines in Ontario being built right now. So we think we're going to be fine on the labor front. And there's lots of other mines. In fact, Lac des Îles, which is to the north west of us, has announced that they're closing that mine down next year. So probably that will free up. And they've got several hundred employees that'll be looking for work there. So we're not anticipating a shortage of labor.
What are the payment schedules for the Wheaton stream financing?
Well, that money will be drawn down in tranches as construction proceeds. So the way generally mines work is you spend your equity first, your stream second, and your debt third. So it'll be in that order.
Why the significant decline in gross revenue in year 9 of production?
Because we get into some low grade. That's fairly typical in a mine. You don't want to have that. And in fact, probably as the mine design evolves, that will try to be avoided. But yeah, at one point we'll get into some low grade ore. You still make a profit, a small profit, but it's not as lucrative as the other years. But we'd rather have that happen in year 9 than say year 3.
Is Ocenscope considering taking an investment into Gen M as a shareholder? I have seen some cases where they do.
We have not had that discussion with them. I think that could be a possibility. Certainly some of the other groups we're dealing with, the off-takers, for example, there's been equity discussions with them for sure. Absolutely.
What is Sibanye-Stillwater's long-term plans with their shares?
Well, I think you'd have to ask them. They have never given us any direct feedback on that other than to say they support everything we're doing. They've been happy shareholders. They've seen what we've done and accomplished over these past several years. But yeah, they haven't, at some point they may sell them. I mean, they have never said, but they have not sold a share in the 7 years that they've been shareholders.
Why have there been so few copper discoveries in the past 10 years?
Well, I alluded to that in the presentation. I think this is just me. I'm sure that experts might have some different opinions. It's certainly not for lack of expenditures. There's been huge expenditures on exploration. I think one of the reasons is that the easy to find projects have been found, the ones that outcrop on surface and you can find right on surface. So now they're looking for buried deposits. It's a whole different exploration game. It's harder, it's riskier, and even once you make a discovery, they're harder to drill off because they're deeper, and they're much harder to develop if you have to put a shaft down and go underground. That can take the shaft alone can take a couple or 3 years. So yeah, it's a different world out there now.
How do the copper equivalent grades compare to Canadian and US peers?
Our copper equivalent grade, and this is not going to be 100% accurate because metal prices fluctuate all the time. So copper equivalent grade fluctuates all the time. But the last we did the exercise with our engineers, we came out with a 0.7%. There are mines out there that are 0.25%. There are mines out there that are considered high grade at 0.5%. So 0.7% is in the upper end of copper mining. So it's a really good grade.
Will you need to fly in your employees?
We expect the employees to mostly live in the area. Certainly during construction, people will have to be flown in. Probably the main route, though, will be commercial flights into Thunder Bay and then driving out. But we do have in an emergency, we can always charter planes and land them right at site. But we're going to be obviously hiring as many local people as we possibly can. It makes economic sense. It makes community relations sense. And it's just the best thing to do.
Is there intent of processing the minerals internally or outsourcing those services?
It doesn't make any sense to send our ore for milling somewhere else. That would just be too expensive. So that's why you build a mill on site. But we're not building a smelter. I mean, there's only one copper smelter in all of Canada. And to permit a copper smelter, you're probably looking at 5 or 10, even more years. And that's at the Horn Smelter in Quebec. And we're intending to ship certainly our initial stuff all to them. And then there's some other smelters in Europe that we're talking to. We're getting a lot of interest. There is a bit of a shortage of copper concentrate in the world right now, so we're getting a lot of interest in it. But if we can process it in Quebec, that means that the copper will likely be refined in the Montreal area, where the only copper refinery is in Canada. So if we can keep it in Canada, that's the way to go.
There's been a lot of talk from Canada to support key mining projects, but what exact advancements have come to fruition?
So there's been a couple. One doesn't really affect us, and that's the permitting. The governments in a lot of provinces have been working to try to speed up the permitting process because it can get ridiculously long. So, but that's, like I say, that doesn't help us. We've already spent all the money and taken all the time to get there. The other big one, of course, is helping financially. And the federal government has taken the lead role in that in a long way. They have a number of different initiatives. We're talking to all of them. They're all separate, but sometimes they're dependent on one another. It's a complicated process, but certainly the federal government is talking about, and the Foran mine that I mentioned during my presentation got a bunch of money from the Canada Growth Fund, for example, and of course Canada Growth Fund did well on it. I think they doubled their money, so it's turned out to be a win-win situation for the government and the mining company. We're talking to them, and we're talking to other groups as well in the government, and we're expecting a significant, as I pointed out in the presentation, we're expecting a significant amount of money from the federal government, and still trying to push the provincial government into something, and we may have some success there as well.
Thank you, Carrie, for all your answers today. If you do not get a chance to submit your question, feel free to reach out to the appropriate account manager here at Renmark. This concludes our presentation for today, but before we go, I'll turn it back over to you, Carrie, for final remarks.
We certainly are looking forward to finally getting to start build this project this year. Thank you for those of you that are long-term shareholders, and I know some of you are watching today, and we're going to get the job done. So please, if you have time, go onto our website and sign up for to get updates. You will get them from Renmark, but you'll probably get them a little quicker from us directly. So please go on and sign up. And thanks. And please reach out to us if you've got any questions. You can reach out to Chris Haldane through our website, and he can direct any calls directly to Jamie or myself. Thanks.
Once again, this was Generation Mining Limited, trading on the Toronto Stock Exchange under the ticker symbol GENM, and on the OTCQB under the ticker symbol GENMF. Thank you again to everyone in New York and surrounding areas for joining us today. Stay tuned for other presentations in your area. Thank you, and see you next time.